So today we'll talk about the topic gold. Welcome to my channel, where we bring you the latest insights and perspectives on investing and financial knowledge from around the world. Price of gold in the last 30 years? The approximate yearly averages of the price of gold from 1993 to 2022. Please note that these prices are subject to fluctuation, and the actual prices at any given time may differ from the averages listed here. What affects the price of gold? The factors that affect the price of gold. Supply and demand. The supply of gold comes from mining and recycling, while the demand for gold comes from jewelry, investment, and industrial uses. When the demand for gold is high and the supply is low, the price of gold tends to increase, and vice versa. Economic and political stability. Gold is often seen as a safe haven asset during times of economic and political instability. This is because gold is not tied to any specific country or currency, so it can hold its value even when other assets are losing value. When there is uncertainty in the markets, people tend to invest in gold as a way to protect their wealth. This can cause the price of gold to increase. Inflation and deflation. Gold is often used as a hedge against inflation, which occurs when the value of currency decreases over time. This is because gold retains its value over the long term, so it can help protect against the erosion of purchasing power that comes with inflation. When inflation is high, people may turn to gold as a way to protect their wealth from losing value. On the other hand, when there is deflation or a decrease in the general price level of goods and services, the demand for gold may decrease, causing the price to fall. Interest rates. The price of gold is also affected by interest rates. When interest rates are low, people may be more likely to invest in gold as a way to earn a higher return on their investment. This is because gold does not pay interest or dividends, so it can become relatively more attractive to investors when interest rates are low. Conversely, when interest rates are high, people may be less likely to invest in gold, causing the price to decrease. The strength of the US dollar. Since gold is priced in US dollars, the strength of the dollar can also affect the price of gold. When the US dollar is strong, the price of gold may decrease, as it becomes more expensive for buyers outside the US. Conversely, when the US dollar is weak, the price of gold may increase, as it becomes cheaper for buyers outside the US. This is because when the US dollar weakens, other currencies become relatively stronger, making gold more affordable for buyers who use those currencies. These factors are not mutually exclusive, and they can all affect the price of gold at the same time. For example, if there is economic instability and inflation is high, the demand for gold may increase as people seek to protect their wealth from losing value. At the same time, if interest rates are low, investors may be more likely to invest in gold as a way to earn a higher return on their investment. How does gold help countries in developing their currencies? A. Store of value. Gold has been used as a store of value for centuries, and it continues to be a popular investment option for many individuals and countries today. When countries hold gold as a reserve asset, they can use it to back their currencies, which can help maintain confidence in their currency and strengthen its value. By having a reliable store of value, countries can help reduce the risk of currency devaluation and inflation. B. Hedge against inflation. Gold is often seen as a hedge against inflation, which is the rate at which prices for goods and services increase over time. During times of economic uncertainty or high inflation, gold tends to retain its value, making it a popular investment option for those seeking to protect their wealth. By holding gold, countries can protect themselves against inflation and currency devaluation, which can help maintain the stability of their currency. C. International trade. Gold is a universally accepted form of payment in international trade, particularly in transactions between central banks. When countries hold gold as part of their foreign exchange reserves, they can use it to settle international debts and maintain their position as a global economic power. Having a strong reserve of gold can also help a country establish credibility in the global financial markets, which can further strengthen the value of its currency. D. Diversification. By holding gold, countries can diversify their portfolio of assets, which can help reduce overall risk. A diverse portfolio can help mitigate the risk of economic volatility and ensure that a country's wealth is not overly concentrated in a single asset class or industry. By holding a mix of assets, including gold, countries can better manage their currency risk and protect against potential losses. In summary, gold can provide many benefits to countries looking to develop their currencies. From serving as a reliable store of value and hedge against inflation to playing a key role in international trade and providing diversification to a country's portfolio, gold can help countries strengthen their economies and maintain their position as global economic powers. How does the gold reserve help countries like India and China? From an economic point of view, here are some more details on how gold can help countries like China and India. 1. Reserve asset. Both China and India have large reserves of foreign currency, which they can use to support their economies and maintain their position in the global financial markets. However, holding foreign currency reserves can be risky, as it exposes a country to the risk of currency devaluation and inflation. By holding gold as a reserve asset, countries can help diversify their holdings and reduce the risk of loss from currency devaluation. Gold is also a highly liquid asset, meaning that it can be easily bought and sold in global markets, which makes it a useful asset for countries to hold as a reserve. 2. Hedging against economic uncertainty. Gold is often seen as a safe haven investment during times of economic uncertainty. In times of inflation or currency devaluation, the value of gold tends to rise, making it a useful tool for hedging against economic risk. China and India are both rapidly growing economies, but they also face significant economic challenges, including inflation and currency devaluation. By holding gold, they can help hedge against these risks and protect against potential losses. 3. Global economic power. Both China and India are emerging as major global economic powers, and their positions in the global financial markets are becoming increasingly important. By holding gold as part of their foreign exchange reserves, they can help establish credibility in the global financial markets and maintain their position as economic leaders. The amount of gold a country holds can be seen as a reflection of its economic power and stability, and can also help to signal to other countries and investors that it is a trustworthy and reliable economic partner. 4. Cultural significance. In both China and India, gold is deeply ingrained in the culture and is often viewed as a symbol of wealth and prosperity. This cultural significance makes gold an important part of the economy, as it drives demand for the metal and creates opportunities for gold-based industries. For example, India is one of the largest consumers of gold jewelry in the world, and the gold industry is an important source of employment and economic growth in the country. In summary, gold can help countries like China and India diversify their reserves, hedge against economic uncertainty, establish credibility in the global financial markets, and leverage the cultural significance of gold as a symbol of wealth and prosperity. How can the gold reserve impact the dollar dominance in the current scenario? The gold reserve can impact the dominance of the US dollar in the current scenario in a few ways. 1. Diversifying away from the US dollar. The US dollar is currently the dominant global reserve currency, with many countries holding significant amounts of US dollars in their reserves. However, if more countries start to diversify away from the US dollar and hold gold as a reserve asset instead, this could reduce the dominance of the US dollar in the global financial system. This could also reduce the ability of the US to use economic sanctions as a foreign policy tool, as countries could rely less on the US dollar for international trade. 2. Strengthening currencies. Gold can be used as a hedge against inflation and currency devaluation, which can help strengthen a country's currency. If more countries start to hold gold as a reserve asset, this could lead to stronger global demand for gold, which could in turn lead to higher gold prices. This could benefit countries that have significant gold reserves, as their currencies could strengthen relative to other currencies. 3. Increasing confidence in currencies. Holding gold as a reserve asset can also help increase confidence in a country's currency, as it signals to investors and other countries that the country has a stable and diversified reserve portfolio. This could lead to increased demand for the country's currency, which could further strengthen the currency and reduce reliance on the US dollar. 4. Creating an alternative to the US dollar. Some countries, particularly those that are not allies of the US, have expressed interest in creating an alternative global reserve currency to the US dollar. Gold could potentially be a component of such a currency, as it is a widely accepted and trusted store of value. If more countries start to hold gold as a reserve asset, this could help facilitate the creation of a new global reserve currency that is less dependent on the US dollar. In summary, holding gold as a reserve asset could help reduce the dominance of the US dollar in the global financial system, strengthen currencies, increase confidence in currencies, and potentially create an alternative to the US dollar as a global reserve currency. However, it is worth noting that gold is not a perfect substitute for the US dollar, and there are still many challenges to creating a viable alternative to the US dollar as a global reserve currency.